Hello, you are still in chapter 9. Now we're gonna take the second method using the allowance method to estimate the uncollectables, which is percent of receivables. We are using the allowance method, okay, and we are talking about the estimation entry or the adjusting entry, which is bad debt expense to allowance for bad debts. We are using balance sheet approach, which is percent of receivables method. Okay, so first we need to find target balance, which is the ending balance of accounts receivable multiplied by the uncollectable percentage. Step 2, to find the bad debt expense, I need to draw a T account for the allowance, and I need to check what is X. I need to solve for X. Okay, so it depends if you have a debit balance or a credit balance. If you have a debit balance, we're gonna add to find or to solve for X. If we have a credit balance, I need to subtract to solve for X. We have this question, which is the accounts receivable balance for field company at December 31st, 2015 was 25,000. During 2016, field earned revenues of 457,000 on account. So this is my credit sales. And collected 326,000 on account. Now field wrote off 5,900 receivables as uncollectable. Industry experience suggests that uncollectable accounts will amount to 4% of accounts receivable. Now, as you know, accounts receivable, it's not a temporary account, it's a permanent account, which means what? We do not close it at the end of the period. So I need to draw a T account for the accounts receivable and for the allowance for bad debts. It's not like the sales revenue. We close sales revenue at the end of each period. So the balance is 0 at the beginning of each period, while for the accounts receivable, it's accumulating from one period to another. Okay. Now let's find the accounts receivable balance before we read the requirements. Now he's saying the accounts receivable balance for field company at December 31st, 2015 was 25,000. As you know, the accounts receivable is an asset account, so it has a debit nature. So the normal balance is debit. So I'm gonna start with 25,000 debit side. This is the ending of 2015, so it's gonna be beginning for 2016. Then he said he earned revenues of 457,000 on account. So this entry was accounts receivable to sales. Okay, and the amount was 457. Okay, so accounts receivable has increased. So I'm gonna debit accounts receivable 457,000. Then collected 326 on account. Collected means cash will go up, accounts receivable will go down. Okay, by 326,000. Okay, so on the credit side I have 326,000. Field wrote off 5,900 receivables as uncollectable. Okay, so write off under the allowance method, it's gonna be what? It's gonna be allowance and the debit side, allowance for bad debt and the debit side, to accounts receivable and the credit side by 5,900. So accounts receivable is 5,900 and the credit side. So now what's the balance? What's the ending balance for accounts receivable? I'm gonna add debit side, then I'm gonna subtract the credit side. So I'm gonna have $150 and $100 in the debit. This is my ending balance for the accounts receivable. Okay. Now let's read the requirements. Requirement number 1, assume field had an unadjusted 2,300 credit balance and the allowance for bad debts at December 31st, 2016. Journalize field's December 31st, 2016 adjustment to record bad debt expense using the percent of receivables method. Okay, so again, he's asking for the adjusting entry, which is bad debt expense to allowance for bad debt. It's not gonna change. Okay, only the computation will change from one method to another. Okay, now how can I find this answer? I'm gonna draw a T account for the allowance for bad debts. Okay, now he said that you have 2,300 credit balance. So on the 2,300 and the credit side, this is my unadjusted balance. Okay, as you can see, the allowance and the adjusting entry is in the credit side. So this is X. I need to solve for X. Okay, what's the ending balance? Okay, he said that he is estimating 4% of accounts receivable to be uncollectable. So what shall I do? I need to multiply 4% with the ending accounts receivable with $150,100. If you multiply it with 4%, it's gonna be 6,004. Okay, so the 6,004, this one we call it what? We call it target balance. This is target balance, which means the ending for the allowance. It's here. This is the ending. It should always be in the credit side because the normal balance for the allowance is credit side. So it's $6,004. So now if you want to solve for X, what shall you do? Shall you subtract or add? Okay, since the balance in the credit side, it means that the credit side was greater than the debit side. Okay, so we have 2,300 plus X equals 6,004. So to find X or to solve for X, I need to subtract. Okay, so we have 6,004 minus 2,300. It's gonna be 3,704. This is the amount that you need to put in your entry. Okay, so we are done with the first requirement. Let's read requirement number 2. Assume field had an unadjusted balance 1,900 debit balance and allowance for bad debts at December 31st, 2016. Journalize the adjusting entry to record bad debt expense using the percent of receivables method. So again, the adjusting entry using the allowance method will not change. It's going to be bad debt expense to allowance for bad debts. Again, to solve for x, I need to draw the T account for the allowance for bad debts. Now he's saying that I have 1,900 debit balance, okay? In the entry, the allowance is credited. And the target is also credited. It will always be in the credit side, which is 6,004. 4% of the accounts receivable. Now what shall I do to solve for x? Shall I add or subtract? Again, since the target or the ending balance is in the credit side, it means the credit side was greater than the debit side by 6,004. So x was greater than 1,900 by 6,004. So to solve for x, I need to add 1,900 to 6,004. So it's gonna be 7,904. Thank you for watching. If you have any question, please leave a comment. Please like, share, and subscribe.